Welcome back, institutional stakeholders, to this executive explainer covering Rivian's first quarter 2026 earnings. Today, we're focusing squarely on their strategic roadmap to profitability, and wow, what a quarter it's been. Rivian just reported a period filled with massive operational shifts, some truly pivotal engineering milestones, and major capital injections. So let's jump straight into the hard data and see exactly how they're positioning themselves to dominate the second half of this decade.
Real quick, before we unpack all these numbers, I do need to state that this video is for educational purposes and not financial advice. We're just setting the proper boundary for our analysis today as we review these corporate disclosures together.
Okay, here's our game plan for today's briefing. We're going to hit Q1 2026 financials first. Then, we'll dive into scale and efficiency, optimizing the Georgia facility, those massive strategic partnerships, and finally, we'll wrap up with liquidity and their capital runway.
Let's kick things off with Section 1, First Quarter 2026 Financials.
So Rivian brought in approximately $1.4 billion in top-line revenue for the first quarter. That's a really solid 11% year-over-year growth. But honestly, what's equally critical for us to pay attention to here is that they generated $119 million in consolidated gross profit. A huge driver of this revenue bump was actually their software and services segment, which just proves that their vertically integrated tech stack isn't just a buzzword, it's actively padding the bottom line.
And this really illustrates their operational throughput right now. Out of their Normal, Illinois facility, Rivian produced 10,236 vehicles, but check out that delivery number. 10,365 vehicles actually delivered to customers. Deliveries outpaced production. That's a 20% volume increase compared to last year. In a highly competitive EV market, that kind of sustained demand is huge. They're basically clearing inventory straight from the factory floor to the customer's driveway without missing a beat. All right, moving to Section 2, Scale, Efficiency, and Profitability.
You guys, this right here is a massive milestone. The R2 has officially begun saleable production in Illinois, and those initial deliveries are already making their way to employees. This is a total game changer for Rivian's future. By rolling out the more attractively priced mid-sized R2, they are dramatically expanding their total addressable market. They've essentially taken that premium core design, performance and tech, and scaled it for a significantly broader audience.
Now, when we look at the capital efficiency of the new R2 compared to the legacy R1, the numbers get incredibly interesting. Rivian is targeting an aggressive 50% reduction in their bill of materials, or BOM, for the R2. On top of that, non-BOM costs are expected to drop by more than half. This isn't just about shrinking a car down, it's a fundamental shift toward design for manufacturing. As production volume scales up, those fixed costs are going to be absorbed across way more units, which absolutely accelerates their path to profitability.
Let's get into the engineering weeds for a second to see how they're actually achieving those cost reductions. First, they're using large, high-pressure die casting in the underbody. We're talking 90% fewer parts and a 30% reduction in piece cost just from that alone. Then, by swapping out traditional ultrasonic sensors for new corner radars, they're saving over 50% there. And crucially, they did a 5-to-1 power module consolidation, which strips out roughly 70% of their high-voltage cabling. These are highly strategic, ruthless engineering choices that eliminate both cost and manufacturing complexity.
Pushing forward to Section 3, Optimizing the Georgia facility.
When it comes to their macro CapEx initiatives, Rivian made a huge strategic pivot this quarter regarding their massive upcoming Georgia plant. They've updated their plans to boost initial Phase 1 production capacity by 50%. That brings Phase 1 up to 300,000 mid-sized units annually. This aggressive upfront capacity bump is explicitly designed to maximize cost efficiency from day one, all while leaving plenty of physical runway on the site for future expansions.
As for the timeline, Rivian expects to take its very first draw on a low-cost loan from the Department of Energy in early 2027. That clears the runway for actual vehicle production in Georgia to fire up in late 2028. This $4.5 billion DOE partnership is absolutely vital. It gives them the low-cost financing they need to really establish U.S. manufacturing leadership.
Section 4, Strategic Uber and VW Partnerships.
Think about the sheer contrast in how Rivian's tech is being utilized right now. On one hand, you have dense urban environments, which is the focus of their new partnership with Uber to accelerate fully autonomous robotaxis. On the other hand, you have rigorous freezing winter testing happening all the way in Arjeplog, Sweden. That's for their joint venture with Volkswagen Group, RV where they just successfully validated their production intent zonal architecture for VW's next-gen software-defined vehicles. That's two radically different operational extremes, proving the incredible versatility of Rivian's core tech.
And if you're wondering what those partnerships mean in hard dollars, it's pretty staggering. The Uber deal is expected to bring in up to $1.25 billion through 2031, which is tied to a massive commitment for up to 50,000 fully autonomous R2 robotaxis. Meanwhile, crushing that winter testing in Sweden was a technical milestone that literally unlocked a $1 billion equity investment from Volkswagen, capital that Rivian actually received today. That is tremendous, undeniable validation from two absolute giants in global mobility. Finally, Section 5, Liquidity and Capital Runway.
If we want to assess their financial health, this liquidity bridge paints a beautifully clear picture. Rivian ended Q1 with $5.39 billion in total available liquidity. But when we factor in the expected 2026 capital from the VW equity and Uber's initial investments, that number jumps to $7.94 billion. Zoom out even further to include the full $4.5 billion DOE loan and future milestone payouts, and their expected future capital scales to an incredibly comfortable $13.6 billion. They have thoroughly capitalized their entire expansion roadmap.
Before we wrap, I have to quickly highlight the external funding momentum surrounding Rivian spin-out ventures. It just shows how valuable their broader ecosystem is becoming. Mine Robotics recently pulled in a $500 million Series A, co-led by Andreessen Horowitz. Then you have also their micromobility spin-off, which just secured a $200 million Series C and announced a multi-year commercial collaboration with DoorDash. Keep in mind, Rivian still maintains a roughly 35 to 38% ownership stake in both of these highly valuable entities.
So, bringing it all together, I want to leave you with a provocative thought to chew on. With their Georgia capacity expansion fully capitalized by the DOE, their autonomous and zonal architecture rigorously validated and funded by heavyweights like Uber and VW, plus a targeted 50% cost reduction for the R2, is Rivian now perfectly positioned to dominate the fully electric AI-defined automotive market of the 2030s? They have laid an absolute fortress of a foundation this quarter, and frankly, watching them execute over the next 24 months is going to be incredibly fascinating.
Well, that concludes our analytical briefing on Rivian's Q1 2026 roadmap. Thank you so much for joining me today to unpack these critical developments. Please remember to like and subscribe for more videos.